5 pipeline giants, billion-dollar infrastructure, and hefty dividends. In recent weeks, I introduced you to Pembina, TC Energy, ONEOK, Enbridge, and Kinder Morgan. Today, we're drawing the big conclusion. Which pipeline stock is especially interesting for income investors? Where are the differences? Where are the opportunities and also the risks, especially in the coming years? Let's wrap up the series with a clear comparison. Let's start with Pembina Pipeline, a Canadian midstream company. Not the biggest, but extremely solid. The dividend yield is around 5.7%. The payout ratio is moderate, and above all, this is a company that consistently shows it prefers to pay reliably rather than make big promises. Number 2, TC Energy is a heavyweight in Canada, especially in the gas sector. The dividend yield is very high at 7%, but the debt is about 5 times EBITDA, and that's a real drag. In the long term, a change in interest rates could help. In the short term, however, caution is definitely advised. Now let's move on to Enbridge, the dividend aristocrat. 53 years without a dividend cut, 22 consecutive years of dividend increases. With a current dividend yield of around 6% and the largest pipeline network in North America, Enbridge is, for me, a rock in the surf. There is high debt, but the business model is extremely stable. Now let's move on to ONEOK, a US giant focused on gas and NGL. Around 90% of revenues are fee-based. That means stable income, no matter how much commodity prices fluctuate. With a dividend yield of around 5% and clear growth projects in the LNG sector, ONEOK is, for me, the most balanced player. Now let's move on to Kinder Morgan. Conservative, fundamentally solid, but with a somewhat lower yield. 83,000 miles of pipelines, 40% of US gas transport. The dividend is around 4.3%. Not a high flyer, but a kind of cornerstone for the US energy sector. Now you see a comparison table. I've once again put everything side by side in a table so you can take a close look and make a comparison. In the following section we have listed the current dividend yield, the payout ratio, the debt to EBITDA, and any other special features. Regarding the yield, TC Energy currently provides investors with the highest, while Kinder Morgan offers the lowest. But a high yield doesn't automatically mean better. Sometimes it's also a warning sign. Payout, all are between 65 and 75%. That's healthy as long as cash flows remain stable. Debt. TC Energy is the most heavily indebted with debt 5 times its EBITDA. This makes them more vulnerable if interest rates remain high. Pembina is the most relaxed in this regard. The special features, Enbridge is the aristocrat, ONEOK is the fee-based US player, and Kinder Morgan is the conservative giant. What opportunities do I see in the overall market? Gas as a bridge in the energy transition. All 5 benefit from the fact that gas will remain the most important transitional energy source for the next 10 to 15 years. LNG exports are growing massively and pipelines are what make this possible. And pipelines are the arteries that make this possible. AI and data centers, artificial intelligence and cloud computing consume endless amounts of electricity. The majority of that still comes from gas in the US and will for a long time. That means more demand for pipelines. Pipeline monopolies. These companies effectively hold a monopoly position. No one just builds 80,000 miles of pipelines overnight. Whoever owns the infrastructure controls cash flows for decades. Now let's talk about the risks in the overall market. The debt. Many of these companies are highly indebted. That's typical in the midstream sector, but with high interest rates, it can become dangerous. Politics and regulation. Canada is considering stricter emission targets. In the US, there are debates about new projects. Political pressure remains a risk. The valuation. A price-to-earnings ratio of over 20, as with Enbridge or Kinder Morgan, is not exactly cheap. Investors pay a premium for stability. Interest rate environment. TC Energy is a prime example here. The high yield sounds tempting, but if refinancing remains expensive, things will get tight. In conclusion, you can rank them as follows. Enbridge, the aristocrat, 53 years of history for income investors, the safest bet. Pembina, solid, well-financed, for me the safe haven among the Canadians. ONEOK, fee-based, strong in the gas and NGL segment, very balanced. Kinder Morgan, conservative, stable, but with lower returns. For me, more of a core investment than high yield. TC Energy, high yield, but also high debt. If interest rates fall, there could be a comeback. Now let's get to my conclusion. Pipelines are not skyrocketing stocks, but they are cash flow machines that provide us as income investors with stable and predictable income, delivering stable, predictable dividends year after year. The mix of Canada and the USA provides security and diversification. Whether it's aristocrat Enbridge, reliable Pembina, fee-strong ONEOK, conservative Kinder Morgan, or the heavily indebted TC Energy, each stock has its place in a dividend portfolio. For me, pipelines are among the stable building blocks in the high-yield sector. They don't deliver the most exciting headlines, but that's exactly their strength, predictability. Feel free to write in the comments which stock you prefer or how you would diversify the risk in this case. I'm looking forward to your comments. If you haven't subscribed yet, I would appreciate it if you did. Otherwise, please give the video a like if you enjoyed it. Until then, see you in the next video. I wish you successful investing.